The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Now, Steve Rhodes.
Good Monday morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you. I treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is to provide you with the tools that will help you to lead an inspired life. Leading an inspired life, folks, that's what it's all about. I hope you had a fantastic weekend out there. It's a wonderful Monday. Let's go take a look at one of our tools. This is the tool that I call Creating Opportunity. Now, an enterprising person, which I'm sure that you are, an enterprising person is one who comes across a pile of scrap metal and sees what? They absolutely see a sculpture, folks. How about an enterprising person? Maybe this is you. It's one who drives through an old, decrepit part of town and sees what? That's right, sees a new development. You see, an enterprising person is one who sees opportunity where? In all areas of life. Are you an enterprising person? You absolutely should be. You want to be. That is one of those fundamental blocks that you need to have in order to be able to lead an inspired life. To be enterprising, folks, means what? It means to keep your eyes and your mind active, your eyes wide open, your mind active. It's to be skilled enough, folks. It's to be confident enough. It's to be creative enough. And it's to be disciplined enough to seize what? To seize every opportunity that presents themselves. And folks, there are always opportunities right in front of you, and you want to seize those opportunities regardless of the economy. People get too caught up into whether it's a good economy or bad economy. The truth is, in the worst economies, out of the worst economies, have created some of the largest, some of the best entities, some of the best thinking out there. It is totally the time to be opportunistic. Do your homework. Do your research. Be prepared. But, folks, be resourceful and always do all that you can do in preparation for what? That next opportunity that lies in front of you. Maybe it's education, whatever it is that you need from us, to add to your skill set. But enterprising people, what they see is they see the future right here, right now, in the present tense. It's Monday morning, and what does your future look like right now in the present? Create opportunities, folks. That is what it's all about. That's how we kick off our Monday morning. Let's go see how these markets are kicking things off for us. Right now, you've got the Dow futures, all the futures here across the board down just slightly. Dow futures off maybe about 18, 19 points. The ES Mini off about 250, trade out at 1456. If we take a quick peek and see what's going on around the world, the handoff in the race here. You had the Nikkei was closed last night, so we can't take a look at what went on in Japan. They were celebrating, which is a beautiful holiday. They were celebrating the holiday of the aged. Oh, that's a beautiful thing. Nice holiday over there. Over in the UK, the FTSE's off 16 points this morning. The DAX is down 17 points. No real great shake up there. The Shanghai was off 47 points last night. Now, perhaps that's a leading indicator out there. I don't know. It was down 2%. Of course, it had an explosive move. Several, maybe it was not this past Friday, but the Friday before. We'll take a look at that chart if you would like. Over in the Hang Seng, though, so you had a little bit of yin and yang out there. They were the yang. They were up 28 points last night, only up about 0.15% out there. You got King Dollar trading up 4 ticks right now. Gold really flat, trading out at 17.73. Light sweet crude flat, up 12 pennies. Silver's pulling back. It's pulling back, what, a whole nickel out there. Trading out at 34.61. Give us a call, folks, 877-927-6648. Let's start taking a look at these markets, see where things are going. They are going up in the long term here. Let's just start with the all kinds of patterns. Now, it is a new moon Monday, if you will. The new moon actually came in Saturday night at 9:12 p.m. So let's go take a look at the different patterns that we can see out here. Let's go start with the ES Mini, the daily chart. And we'll draw some of these patterns. There's butterflies all over the place. Maybe there's butterflies in your stomach. Let's go take a look at the butterfly inside the ES Mini. What we're going to do, folks, we're going to take a look at the expansion off of a set of swing points. So many of you may not have the tool to be able to draw the butterfly pattern, but you certainly can visually see it. You can see it in the present. And what we're going to do here is we're going to take a look at the past. So in order to see these butterfly patterns, you have to be aware of what went on in the past, and you're looking at all of these major intersections out there. Major intersection being nothing more than when you see a total change in polarity, a total change in the marketplace out there. In that case here, in the ES Mini, you'd be looking at March 28th, 2012. That swing point high, 14.12 and a quarter. The swing point low that you're going to go to is what? June 4th, I believe, is the date. June 4th. The low out there is 12.62. So you want to take those two sets of swing points from our past, those two major intersections, and you want to make sure that your tool that you're using to identify expansions has a 1.272 and a 1.618. And that's going to give you two different numbers. Those two different numbers, the 1.272, 1462.66. You're trading at 1457 right now, 1458. On Friday, the ES Mini get up to a high of 1468. So the 1.272 butterfly, and I'll draw it in there, but the 1.272 butterfly or expansion of swing points, that's already in. If this area here fails, which I suspect it will, not today necessarily. It's new moon, and so, in celebration of the new moon, you can easily see the market trade sideways, pull back. That's what it should do. It's in overbought territory. If we take a look at this, if this area here does fail, what it sets up is a move to 1517. That would be your 1.618 butterfly. Let's go draw those patterns in, see what they look like here. When I use this tool, it automatically show you the A to B equals CD, which you need to have present in order to be able to have a butterfly out there. That is what she looks like in Technicolor. And if we take a look at that Technicolor, this is showing us our A point here of the A to B equals CD is June 4th. So that's your swing point low. That's your A point. Your B point is the high that was put in on July 5th out there. 1375 is that magic number. Now, what you can see is it pulls back, and it pulls back to the July 12th area, makes a low of 1319.75. As it's doing that, and let's go measure the retracement out there. Let's just erase some of these lines here. And folks, if you are just listening to us on the radio, we absolutely appreciate you doing that. Maybe you're listening on your mobile device. And talk about mobile devices in 24 hours. Apple sold 2 million iPhones. That's not such a bad, wouldn't you like to have a product where you could sell 2 million of them in 24 hours time period? In this case here, if you are listening on either of those devices on the radio, on your doesn't have to be an iPhone, but your mobile device out there, please go to the homepage at tfnn.com. You can watch us on TigerTV. This show is archived on Channel 9. So if we take a look at the retracement from the B to C leg, that B to C leg, let's just go see what kind of energy is in that move. And as we take a look at that retracement, what you're seeing is all that it did was a 0.382 retracement from that B to C leg. That's measuring, in essence, the retracement from A to C. So when you do only a 0.382 retracement, looking for my energy meister here, I don't have it. But if you took that rubber band and you wound it around your finger and you only backed it off 38% and you let it go, it's going to have what? It's going to have more energy than if you backed it off to the next level, which would be 61%. Makes sense, right? See, logically, all of this makes sense. I'm just putting together the pieces of the puzzle. I can teach you how to read the charts. I absolutely can. And the bulls and the bears are continuing on a constant basis, always giving you information about the market out here. When you take a look at that 0.382 retracement, folks, let's take a look at the A to B equals CD. Do you think it was a one-to-one that was made? Well, let's go take a look. If we take a look at it, the answer, obviously, no. You had more power. That means that, you're going to make a one-to-one A to B equals CD. What percentage of the time out there? What percent? 60% of the time, you're going to make a one-to-one A to B equals CD. Do you think the market continues to give you clues as to whether or not you're going to make larger than a one-to-one? It absolutely does. In this case here, the 1-to-1 0.272 would have completed at 1463.12. So you got a 1 to 1.272 A to B equals CD. That's exactly what the market was telling you it was going to do at least. Okay? Because 40% of the time, you're going to do 1 to 1.272. You might do 1 to 1.618. You might be 1 to 2. There are ways to know, and I'm going to be teaching folks how to do that in the early part of October as I teach people all about how to really read these markets by understanding Japanese candlestick charting. But that's for a different day, a different time period. Here, in this case, we don't know if the 1 to 1.272 A to B equals CD is over. Right now, we have not been given a signal whatsoever other than a timeout, meaning it's going to move sideways at least, maybe pull back here. And so if this area fails, this says the 1 to 1.618 takes you up to the 1512 area. I don't recall right now what the 1.618 expansion of swing points was, but we can put that back up. So you've got the new moon that's come in. You've got patterns that are set up here. And if these areas here fail, what piece of information is that possibly releasing to you? Is that telling you that the lunar strategy isn't failing, or the lunar strategy that's in place that normally works isn't working? Or is it telling you that Uncle Ben and the Federal Reserve are just simply in charge of the lunar phases right now? They are more powerful than the moon. I say mark Friday's high out there, folks. If you get a break above that, the ES Mini wants to trade at least to that 1560, it looks like 1552. I can't even read that out there. Let me take a look at what that 1.618 expansion, because that's really where I believe that it would head to. So let's take a look at those numbers there. They are out in red. So you're looking at 1522 as the range on the ES Mini. If we take a look at, so that's on the S&P 500. If I'll actually put up the index here for you. Many of you don't follow the futures. Here is, before I do that, there's the weekly chart of the S&P 500. All kinds of banter, in the news media, whether QE1, QE2, QE3, whether anything does any good. If you're trading these markets, I think what you do is you just always be aware of history out there. That's all. Makes it that simple. Your skin is in the game. I know your money's in the game. Lines have been drawn in the sand. Position yourself. Always take advantage, what did I say, of every opportunity that is given to you. And there are opportunities all over the place. If this market closes below last week's low, that's automatically going to tell you, not that it can't be tested, because it absolutely can. But if you get it closed below last week's low, that's telling you that, okay, maybe this QE here is not going to work, like QE1, QE2, Operation Twist, and what QE3 should work like here, at least for the next several months out there. That's, of course, my opinion. Really not my opinion. I just really take a look at the charts. The charts tell me what they are, and each day just refresh my mind and let the bulls and bears tell me what they're doing out there. Now let's go take a look at the index out here. Let's go take a look at the S&P 500. So $SPX we'll put out there. That way I don't mess with that chart. And we take a look. We'll also look at the swing point expansion. The swing points that we're going to be using out there, the major intersections, going to be the same ones. We're going to go from the high of April 2nd out here, all the way down to the low that was put in on June 4th. You'll see that the 1.272 expansion, 1464. You close at 1465. That sets up a 1.272 butterfly sell. That area fails. 1518.57 is the magic number that you will see on the S&P 500. 877-927-6648. Dow futures off about 19. NASDAQ futures turned positive while I was going through that little dissertation. Hope you're off to a great start of your Monday. I know I am, just being here with you, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Trader's Edge, folks. And I said that the NASDAQ futures had turned positive, and that is what? Because of Apple out there, primarily because of Apple. That is trading up right now. Closed out at 691.28 out there, gapped up on Friday, trading out at a 699. It looks like 699.43 here. Apple on its way to 714. That would be the 1.618 expansion of a set of swing points out there. I expect that we'll see Apple hit that number at least here in the morning after the market here opens, having sold 2 million iPhones in 24 hours time period. That's I don't know if that's a record, but it sure sounds like a good number to me out there. And, you know, I was talking about opportunity, folks. I just opened up the homepage of TFNN.com, and you still have, it looks like, time to take advantage of the Tiger Dollar opportunity that is out there. Just that's not going to end much, not going to last much longer, that's for sure. I think as soon as our programming staff gets in to change that out. So go to the homepage. If you didn't take advantage of it, folks, it's the opportunity for you to be able to turn dollars, your dollars, into more dollars. That means turns your current education into much more. You can turn $500 into $600. 800 turns out to be $1,000 worth. That's a 25% bonus, and 1150, the big inch lot out there, that gives you $1,500, and that would be a 30% bonus. So if you were sitting on the fence out here, looks like the universe is giving you one more opportunity to go out there and purchase your Tiger Dollars. Let's continue taking a look at these markets out here. Let's go take a look. Let's go back to the futures markets. Let's go take a look at the Dow future. What the Dow did on Friday was got all the way up to the top of the rising price channel out there. The low of that price channel here, folks, that we're looking at is down on the, you'd start with the June 5th open. That was out at the level of 12,064. And what you're looking for is to identify at least as many co-located opens and closes as you can along each of the lines out there. In this case here on the lows, you'd use the June 5th area. You could use the June or July 12th closed, the July 13th open. You'd be looking at the July 26th open. You'd be looking at the close on August 31st. So you can see it's got a number of co-located opens and closes here. Along the top side, looks like we might have to try to expand it out to this upper portion here where it looked like it was moving higher. But what you did do, what did stop price, and we even talked about it during the opening of either the Money Masters show, which is what Tom and I do following the show from 10 to 11, or it was during this show here. There goes that sound. Or this show here, when we're taking a look at the Dow futures running into that area, which is a normal resistance area. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding.
Hey, Steve.
How are you today?
I'm the guy that you were talking about this morning.
I'm the guy that's, oh, that's good, Mr. Opportunity. I love it.
I sent you a link to my website. It's called metalart.michael.com.
Oh, how about that? You turn scrap metal into art. I love it.
Absolutely.
I love it. Oh, that's cool. That's cool.
Yeah.
Hey, well, thanks for listening. That was for you. That was for you. I love how that works.
Today must be my day to call in because you talked about me this morning, and
it is very
but
cool.
Anyway,
now, so tell us about the kind of art that you produce. So tell us what you do.
Well, Steve, I used to be a race car builder, driver, and fabricator.
Okay.
And racing is a very, very expensive sport. So I was always looking for ways to try to make extra money to afford racing tires and all the expenses.
Sure.
And I always had a lot of, scrap metal. Like if a race car gets wrecked, you cut the bent pieces off and you put them in a pile in the corner of your shop. Well, a long time ago, my ex-wife and I, we were in a gift shop up in St. Augustine, Florida, and we saw these huge metal sculptures, very, very expensive.
Yes.
And she said she had to have it for the house. And I looked at the price, and it was like $800. And I looked at her, and I said, I could make something like that so easy.
Oh, cool.
So I just started coming up with my own ideas, taking the scrap metal, the bent-up race car pieces, chopping them apart, and started making sculptures, and people saw them, and I got calls, and so one thing led to another.
I absolutely love it, because an enterprising person is one who comes across a pile of scrap metal and turns it into a great sculpture. What a great story! I love it.
I sent you the proof, Steve, so you can check it out for yourself.
Now, you still into racing? Obviously, I mean, probably once it's always in your skin, always in your.
Yeah, I would love to, but it's so expensive. It's kind of on the back burner.
Yeah,
I'd still like to do it. I try to stay in shape. I'm 53.
Now, are you born and raised in Ormond Beach? So you're always in the Daytona area, or?
No, I'm originally from the Pocono Mountains up in Pennsylvania.
Okay, well, no, that's from Mario Andretti's area, isn't it?
That's very close, yeah.
Super Mario. All right, we'll be right back with Mike, folks, after the market opens. 877-927-6648. Give us a call. We want to know about your sculpture, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 22 points, S&P off 3, Composite down 8. Small caps leading the charge on the way down off 5 points out at 8.59. Let's go back to Mike in Ormond Beach, folks, and let's keep things in the family. Go check out his website. It is metalart.bymichael.com. And check out the opportunity that he has created out there, folks. Michael, so what did you want to take a look at in the SPYs? How can I help you?
Well, Steve, I'd like to look for an entry point in the SPY.
Okay.
And I was wondering where you thought maybe we could pull back to.
Well, so there's a couple of spots where it could pull back to. So I'll give you those areas, and then you can just go ahead and place your trades accordingly.
Right.
The first area is the resistance area that the SPYs broke through. That will become support. Now, I don't know that the SPYs will get back there. And what I'm really talking about, it's pretty simple. Just go back and take a look at the high of April 2nd, which is 142.21. You're at 147, right now. That would be the ultimate for the SPYs to pull back into that area, test what was old resistance as support. I don't really think that we'll see it get back there. The other spot, then the next spot would be the low of last week. So if I just simply put this on a weekly chart, let me see what that number is. The low of last week here in the SPYs, so September, 14? The low would have been 143.46. You're at 146.97. That's what I would be shooting for.
Okay.
Okay, as one possible entry point. So what you might do is you might find a way to scale in on a trade. You know, go ahead.
Multiple buys.
Yeah.
At different points.
Yeah. And then now, if you get a close below this past week's area, you know, then your range is going to be that the area where it broke out on resistance. So your stop should be below that. If we just take a look at, we're going to have to really see how the SPYs here trade, you know, over the next several hours to be able to get any kind of indication. What I'll really do is switch over to the ES Mini, and there's really no A to B equals CD down pattern here yet either. And that's really what I would be waiting for it to set up as an A to B equals CD down, and that would give an indication of where it is that you could enter. But you know, right now, those are really the two best areas. I would say, that one spot you might want to take a look at is at the end of the day. The market should trade down today. If it doesn't, there's still then obviously wants to trade higher. I mean, you know, boy, that took me to go to school to figure that out, right? But what I am saying, it should trade down today, and at the end of the day, might be another spot for you to take a possible entry in on the SPYs.
Okay, Steve.
All right.
Thank you very much.
You bet. Thanks for listening, as always. Thanks for calling.
Yep, bye-bye.
Okay. So let's go take a look at some of these stocks here, folks, that are popping and dropping. You've got Apple, as we said, before the pre-market trading out at $6.98 right now. That's leading the charge dollar-wise on the way up. You got Iris International, IRIS is the ticker symbol. That's trading up 44%. Oh, my goodness, must be a buyout there. We'll go take a look at that stock for sure. I hope some of you folks are in that. So let's see. You've got Danaher to buy Iris International for $338 million. Let's go take a look at that stock chart and see what it looks like. See how people are ringing the register here this morning. So it's traded out at 1948 here. Let's see if this equity has ever traded at that level. Oh, it certainly has. So let's put this on a longer term. Let's put this on a weekly chart out here. And this stock at one time made its highs back in the 2005 time frame, folks, out at the $28 mark. I wonder if that was the actual high, 28. 28 was, sure was, one of Basil's round number highs. How about that? Makes $28 even Steven on November 18th, the week of November 18th, 2005. Now it's trading out at 1905. So there's a lot of folks. This thing has been in a sideways consolidation area here for quite some time, going back as far as 2008. So that is quite a long consolidation period. That is on Iris International. You got Chipotle jumped out in front here, up $11 and change. That is taking on a supply line. We'll go take a look at that. Tesla Motors, TSLA, up 7% this morning, up $2 and change. Waste Connections, WCN, is up 7% this morning. They're up $2 and change. Wynn Resorts, Steve Wynn, being on Piers Bronson. Is that, isn't it Piers Bronson? Piers Morgan show last night with Tony Robbins. He also had T. Boone Pickens and who he had? Oh, he had the basketball guy. Can't remember the name. It was a good show. If they replay it, it would be worth watching. Anyway, Wynn Resorts up $1.68. That's up 1.5%. That's leading the charge on the way up. Not so good. Leading the charge on the way down, Netflix. Netflix, can't get out of its way. Any bounces in Netflix should absolutely be sold. That is up down 4% this morning, off $2.75. You got Rock Tennessee, RKT, that rocket ship, off 3% this morning. You've got Threshold Pharmaceuticals. They're getting hammered. THLD, we'll certainly go take a look at that. Down 27% here this morning. What is behind this move, down 27%? I don't see it, but let's go take a look at the stock. Let's go take a look at the equity. Let's see if it's trading down into a volume day. THLD is the ticker symbol, down with huge volume this morning. And so this thing is coming into an area where it gapped up and broke away. Let me just refresh my chart, make sure we've got actual good data here. You can see this equity had wide price spread and accelerated volume. Two of them in here. Maybe it's further back. We'll just take a look. Well, this is the daily chart here, going back to the December time frame of this year. If you take a look at February 12th, this thing gaps up on 28 million shares. That's where it's pulling back to. The high there was 665. You're at 627 right now. Unfortunately, this is the type of stock that you would have liked to have bought as it came back into this area, but you would like to see it come back on lighter volume. So this thing here today so far, in just the first, I don't know how many minutes of trading, 11 minutes of trading, this thing is down with 3 million shares. The area that it's coming into happens to have 28 million shares. So watch how the level, last time this came down, it wasn't able to fill the gap. You know, maybe this thing will pull back a little bit further, pull back into the March 7th area, where it was at a low of 434. Let's see, what was the prior trading session? Was a low of 435. So 2.3 million. Take a look at March 7th. If March 7th, the low of 434 can get hit, hold on less than 1.6 million shares, then that window would still be open out there. Ideally, you'd be looking for this equity to actually close that gap, close that window. That would be February 17th. That's the high of 368, and you'd like to see it do it in that case there on less than 1.3 million shares. Let's put this on a weekly chart, though, before we jump to that conclusion and see what else is out here in this equity. Okay, so on the weekly chart, okay. Of course, no real volume out here. So not compared to what the trading volume was on the week of February 24th. But take a look at this supply line that it was running into. Pretty interesting, huh? So we take a look at that supply line, folks, and what we're looking for, we're looking at a wide-ranging bar on the way down, March 2nd, 2007. The low of that was 864. So I'm going to draw the line across, a little line of demarcation here, and look at how this equity came in there, and the volume, you know, was 2.8 million shares on a weekly basis. It hit that area with 28 million on March 30th, 2012. Still couldn't bust it up. So that is certainly a strong area of resistance. So what that does tell you, not that it shouldn't be able to take out those levels, but it certainly gives you your parameters for identifying a reward to risk trade, right? Because, I mean, when you take a look at the volume on the way down there, which was basically nothing, 2.8 million shares, yet if you take a look at 2 weeks ago, that area got hit with 6 million shares, couldn't get up there. Last week it was hit with 4 million shares. How about that week of March 30th, 28 million shares? So there becomes pretty easy to identify a reward to risk trade on this equity. And so what we could say here is that likely it would get up into the area here. Let's take a look at the high of last week was, let me get my cursor back on it. We'll just actually go take a look at a possible trade here. So the high there, 898. So we got 898, and now we're saying the possibility of taking a trade on this would be if it came and it closed the gap, which would be February 17th. So the high there, 387. So we got our numbers. Let's go see what kind of risk reward is actually in this. We're going to go to the position size calculator. If you haven't had a chance to test that out, folks, go to the home page of TFNN.com. Over on the left-hand side, you'll see an up arrow, down arrow, and you'll see the power of position size, and I believe. And the position size calculator is, I show you how to use that. If you haven't done it, you can use that for 30 days for free. It's part of my newsletter subscription service. So we've got the ticker symbol here. What was it? It was THLD. THLD. I'm just going to go ahead and search for it. Let the system find it. There you go. Threshold Pharmaceuticals. It's a stock. We'd consider going long. So for every $10,000, we're just going to calculate whether or not there's even a good reward to risk trade on this if it came back and tested that gap. So you're looking at, I believe it was 387, and your reward was around 898. You wouldn't use the exact 898, but you get close to that level. And so you could risk 1%. It gives you 7 to 7.5 to 1 reward to risk. I would say that gives you pretty good risk to reward, even knowing that you would run into resistance. That is on threshold, but it's going to have to break through that low area. It might even give you a good enough risk reward if it tests the, let's put this back on the daily chart out here. If it tests the low of March the 7th on less than 1.6 million shares. That area is 488. So let's go put the position size calculator back up there. Let's change the entry price in here, and we'll change it to 488 instead of 387. Whoops, not 588, 488. And let's go see what the reward to risk on this is. that still gives you a 6-to-1 reward to risk. So that's where I would actually look at it to come back and test that area. So that was on, now, got to wait to really see what the volume is like today, but mostly you've got to see what the volume is as it comes into that swing point. That was on threshold. Let's go take a look at Netflix and see what Netflix is doing out here, see what kind of volume is behind Netflix and FLX. That, folks, is a story about really understanding the business that you are in. Here's an equity, right? You take it back, it was trading at $300, 300 even on July 14th. There you go, one of Basil's round number highs out there. That means you should pay attention to those things, folks. And $300, now it's trading at $57. And a lot of people still own this stock from all the way up there. They just didn't believe it. You better be a believer here. This comes back all the way to the open gap that was created in January 2010. Let's put this on a weekly chart here, see where this thing is headed to. So weekly, on the weekly basis, it has broken through the swing point from December 2nd, 2011. That low was 62.37. Broke through there with volume, accelerated volume. Did that on July 27th, the week of July 27th, 55 million shares. Where this thing runs into resistance happens to be the December 2nd area. The low is 62.37 and the high is 70.76 out there, and that is what's holding Netflix in place here. Netflix probably wants to run lower, probably wants to run all the way back to the lows of 2008 in the $20 mark. It's at 57 right now. If you're sitting on this equity, be really careful, folks. Let's go take a look at Chipotle. That's leading the charge on the way up. That's up 3% here, but we know that's going up against a pretty heavy-duty downdraft area. CMG is the ticker symbol, so it's trading out at 347 right now. We'll pull this back. We'll take a look. So here, this is now inside the gap. So it's above the downdraft day. We'll draw the line here on the screen just so it makes it easy to see. No way that it's anywhere near the volume of that downdraft. If we do take a look at volume on the way up, it's pretty light here. So you can see, these are the volume bars along the bottom here. You can see volume is, it had a little breakout session here, which was on September the 7th, 2.1 million shares. As it makes its way up, even lighter volume, 1.5. The next session, 1.1, 831, 740, and then on Friday, 880. So not a lot of conviction on the way up here. The question is, how high will it go? Will it close that gap? Let's just take a look at some retracement levels off of its high to the low, just get some type of area there. So it's above the 0.382 level, and that says that could, if it closes, now when I say it's above, folks, I mean it's just like slightly above. It's at 348 right now, and 340 is, or 346, it's at 340 is the actual 0.382 level, so it's not above the 0.382 level too much. So you got the dead cat bounce here going for it. If we take a look at just simply off of the close from the session where it totally gapped down, which was off of the July 19th high, down to the low that was put in. Let's take a look at those lines. The 0.618 level is looks like about 355.95. I got to get these eyeglasses here adjusted. So about 356 out there. 356 is the 618. I would expect that will be an area where you'd be looking for some type of bearish candle consideration to take place. That is on Chipotle Mexican Grill. Don't know that I probably didn't get that. I think it's Chipotle, but that's okay. You guys will cut me some slack out there. Let's go take a look at Tesla Motors, TSLA. Haven't looked at that stock chart here for a while. That is the, let's see, Tesla gapping up this morning, trading out at 32.48. Oh, boy, time absolutely flies here, folks. 877-927-6648. Dow's off 24. S&P's off 3. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. And, you know, I opened up the this morning's show really just talking about opportunity, and so cool that, you know, we had one of our listeners, one of our Tigers out there, Michael from Ormond Beach, who, you know, because I opened up talking about opportunities, just simply one person will see a scrap pile and turn that into art, and that is exactly what Michael does. I've got his website up here in the den. Go check it out. It's metal. Let me make sure I get it here. It's Metal Art. Metal Art by B.Y. Michael. .com out there. Actually, some very, very cool stuff, and then some history about him. You know, you can see his cars that he's driven. In fact, he and David White are the racers in the Tiger family out here. But absolutely some very cool art out there. And always, folks, take there's opportunity always in front of you. That's really what the opportunity is here at TFNN, us trying to show you opportunities, patterns that are out there inside the markets. Doesn't matter what it is that you trade out here. Doesn't matter what time frames. You want to pay attention to patterns out there. We're taking a look right now at the Euro-US dollar currency chart here on TigerTV. We're taking a look at several patterns that are out there. Now, one of the things that I'll point out is if you take a look at the Euro-US dollar currency chart, what you'll see is you'll see two 1.618 butterfly patterns that came into a price range. Remember, you're not looking for the exact tick. You're not trying to buy the exact tick or sell the exact tick. You'll drive yourself crazy doing that. What you want to be able to do is you want to go ahead and identify some ranges and then understand candle patterns out there, because when you understand candle patterns, you can dig down into some intraday charts. Absolutely, bulls and bears will give you the information that you're, that you're looking for to go ahead and fire away. In this case here, you see two patterns out there. I'm going to clean up some of this stuff. Let's just get rid of the head and shoulders out there. We don't need to advertise our shampoo anymore. Let's get rid of this pattern here that failed. Now, what I will say about this, so you had two 1.618. One larger one. The larger one, folks, was starting off from the time frame that went back to February 24th, 2012. And actually, the pattern began when it created the X point that we were looking at on January 13th. That was a major swing point. That was a change in trend out there, and that was when the euro was at a low of 126.229. So that's where, the larger 1.618 butterfly actually began. Then there was a smaller 1.618 butterfly as well. Now, what happened is, as it was retracing up, it made three really beautiful patterns out there. A 0.786 Gartley sell pattern. When a 0.786 Gartley sell pattern fails, it will turn into a butterfly. Now, you don't know whether it's going to be 1.272 or 1.618. However, this one gave us a clue. Actually gave us a clue and said once that failed, it was likely going to do a 1.618 butterfly. Why? It already had done two of them, right? It already made two of them. And that's if we take a look at what the euro has actually done out here. Let's go ahead and erase some of these patterns. Let's get rid of some of my artwork on my charts out here. See if I can do this without blowing everything. Let's get rid of this neckline. Let's get rid of this pattern. Okay, so now let's take a look at the pattern that actually has completed here. And let's take this here. And what you will see is that the euro, I should change colors on that. Otherwise it's going to be too difficult for you to probably follow. There we go. So now what you can see is, in fact, what the euro did, what it did on Friday, what it's doing right now today, is it's also testing the area where it made a 1.618 butterfly pattern. You got to love understanding Fibonacci expansion and contraction. It exists in life, folks, out there. Now, what the euro has not done, this is not giving you any kind of indication that the bears are ready to take control, that there's about to be a change in trend. In fact, I believe we're going to see the euro go higher, much, much higher. 877-927-6648. That's our call-in number. But call in and talk to Tom and myself when we do the Money Master Show. That is coming up next, folks. Stay tuned. After that, we've got Basil Chapman from 11 to 12, maybe from 12 to 1 as well. Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, the Tom O'Brien Show from 4 to 6. Have a great Monday, folks.